Hello and welcome to this brand new episode of Opening Well. Very good morning to all our viewers. You've tuned in live to this broadcast on Moneycontrol with me, Stacy Pereira, and I'm here to be taking you through all the news and cues that you need to be looking out for, and that could in fact impact your trading day. So let's get straight to it and tell you all that we are getting from the handover from across the globe and also what you need to be looking out for. Well, we do have Wall Street, wherein stock futures now are currently trading lower. That's because the Nasdaq futures have been dragged by Netflix post its earnings. But in normal trade, we did see the Dow Jones gaining for the 8th straight day. Positive corporate earnings is pretty much what is buoying the sentiment on Wall Street, one could say. Whereas if you look at Asia, their trading is pretty mixed since morning, where investors are weighing in all that economic data that is coming in from the region. We do have China's prime loan rate that needs to be decided and what approach the central bank there is going to take. So that is going to be crucial because it will give an indication of what is yet to come. But if you look at the GIFT Nifty, that one is indicating a flat start for the broader index here. Just gains of about 2% when it opened. So we need to see how it really picks up, because yesterday we did see quite a session wherein the Sensex closed above that 67,000 levels. Nifty 2 shutting shop above that 19,800 level. So we could say 20,000 is nowhere far. But we also have an interesting note where the NSE today will be conducting a pre-open session for Jio Financial Services in order to get its price discovery. So this is the demerger that we're talking about of Jio Financial Services from Reliance, and what that stock will then come to trade at. So we'll have to see that, because Reliance shares will trade only post 10 a.m. today in the trading day. But we have an earnings heavy day too. There are pretty much the big tech giant Infosys who will come out with its Q1 earning. Also from the FMCG side, HUL will also be declaring its earnings. Union Bank of India, United Spirits, Coforge, Dalmia Bharat, Havells India, as well as India Mart, a couple of the other companies that you need to look out for their earnings print at least. But if you're talking about the delivery percentage or where the investors are really showing interest, those remain to be stocks like Bharti Airtel, Crompton Greaves, Shriram Finance, SBI Life Insurance, as well as HDFC Life Insurance, which saw a couple of the highest delivery data that we're getting. And if you're looking at where investors are really parking in their money, well, foreign institutional investors have bought in shares worth 1,165 crore rupees in yesterday's trade, whereas you saw domestic institutional investors, the DIIs, who were the net sellers, selling shares worth 2,134 crores on July 19th. So, well, that was a trade setup, but we have a lot to be looking forward to. Let's also get you a sense of what we are seeing, the action in the F&O space. Well, we did see 90 stocks that saw a long build-up in trade. These include Polycab India, Canfin Homes, MCX India, as well as Havells and ITC, that ones that saw that build up, whereas 23 stocks which saw long unwinding. Now, this include RBL Bank, Syngene International, Max Life Services, Bosch, as well as Delta Corp that saw the unwinding that we're talking about, whereas 25 stocks seeing the short build-up. This include Coforge, Apollo Tyres, ICICI Prudential Insurance, Infosys, as well as Tata Power. And when you look at the other side, the short covering, those had 50 stocks that saw short covering. These include Reliance Industries, L&T Technologies, Birla Soft, Memphis as well being in that list. And talking about the stocks that are under the F&O ban on NSE, well, the NSE has added L&T Finance Holding as well as Polycab India into that F&O ban list for July 20th. So this is what we're getting from that space. There's also Delta Corp, India Bulls Housing Finance and Manappuram Finance, as well as RBL Bank that are in the banned space. So we'll have to be looking out for all of that. That is all the action in the F&O space that you need to be looking out for. But let's get going with some of the stocks and strategies that you need to be looking out for to the day. Well, and a couple of stocks that you need to be keeping on your radar as well. And to do that, joining me is Chandan Taparia, the Senior Vice President and Head of Derivatives as well as Technical Research at Motilal Oswal. Good morning and thanks so much for speaking with us, Chandan. What would you say? We are at a very crucial point, sitting there comfortably at 19,800 for the Nifty. But if you have to look at the pivot point at the calculator suggesting maybe support levels at 19,757, is that something that you would consider also? There could be some bit of consolidation and volatility, or do you think there's a what is your key resistance as well as support levels that you would want to give us?
Good morning. Thanks for having me. We have seen a good momentum in the market, especially in last 4 months. The Nifty has rallied well from all the way 16,800 to 19,800. We have seen the rally of 3,000 points. If I look at the weekly basis, the index is continuing its formation of higher highs for 16 consecutive weeks. That means every week we are making the new highs. If I look at the daily scale, the index is making higher highs and lows from last 5 days. So accordingly, the immediate support comes near to 19,730 zone. Till this level is respected, we believe this momentum can extend to us 19,950 to 20,000 zone. So those who are holding the position or looking to take the position are suggested to keep the trailing support or support near to 19,730 to continue the momentum or to play the momentum of the Indian markets.
Right. Chandan, what is your view on the banking space? Now, we've seen a couple of earnings that have come out today. In fact, one of the highlights is going to be Federal Bank too, because that one has come out with its qualified institutional placement. They're going to be putting shares out there at the floor price of 132.59 per share. So in the banking space, is there enough fodder there for investors to be looking at right now? We've seen good earnings momentum as well. What is your take? Also for the bank Nifty for that matter.
Yeah, so Bank Nifty is up by around 2%. Again, we have seen some recovery, and mainly the momentum happened on 17th of July when HDFC Bank came out with its positive number and they changed the structure and the momentum of the consolidative to the positive bias. However, on the last trading session, we formed an inside bar in the daily chart, but base of the Bank Nifty is shifting higher. So we believe that 45,400 and 45,250 are immediate support, and with this support, Bank Nifty can drive the momentum towards 46,250 levels.
Right, so that's the counters that you need to be looking out for the Bank Nifty. But Chandan, also give us a view on IT stocks. Today we have IT bellwether Infosys' results, and that can really, take the Nifty higher, we could say. So how much is riding on that, and should one, is it already factored in, one would say, because we've seen good inline numbers from the other peers like TCS and Wipro as well. So what is your take, and how are you looking at Infosys?
Yeah, so like Stacy, talking about the Nifty, we are in a structured bull market, and you must have noticed that every day one and other stocks are coming out as a man of the match and taking the market to upside. So in last 5 days, we have seen contribution from ITC, Reliance, Infosys, TCS, so Bajaj Finance, so HDFC Bank. So I think that is a good part for the market. And now if I talk about the Nifty IT, we have seen good recovery in last couple of days, but in last 2 days, we have seen some consolidation. Participants are looking for some positive trigger in Infi. However, based on the results, some volatility could be there. But as of now, looking at the data setup, 1435 is the immediate support. Till it holds 1435, there's the potential to rally for 1525 in the Infosys on the upside.
So can Infosys actually be the man of the match? We'll have to wait and see, but we're just a few seconds away from that market opening counter there, and we are headed towards that. The GIFT Nifty did point out to that muted start, one could say, but on your screens there you can see those levels that we are looking at. One would say trading with caution at this point, because we have all of those external headwinds to be looking at. But there on your screen, Nifty just about flat at this point, but above that 18,800 levels. So as unexpected lines, one would say, for the Nifty, but it is oscillating in that range as we had predicted. But Sensex too comfortably above that 67,000 level. So whether that momentum can continue, in fact, just slipping slightly, just a few points here and there is what we're looking at opening bell. So we'll have to, really wait to see whether it picks up from here. But on the other sectoral front, let's see how those counters are doing. Well, we do have the Bank Nifty, like we were just talking about, that one comfortably above that 45,700 odd level. So the momentum could continue there for it. Mid caps also comfortably 36,920 odd points is where the mid caps are trading. Those ones, actually, the broader markets being quite the out players, one could say, in this whole rally. Even the small cap, they're comfortably in the green, up by 0.32% higher. But they have really been the outperformers, one would say. They do have their one-off odd days, but the party could actually be in the mid-cap and broader indices space. Nifty IT, though, now trading there in the negative, could be the pressures and the anticipation of what we could hear from Infosys as well. Metals, that is another counter that has seen quite a bit of swings, especially when we get to hear of data coming out from China. Well, that is the one that really takes a toll on the metal index then. Nifty Auto also trading there lower at this point. So a fair bit of consolidation as we were anticipating. Maybe that is what is happening. Profit booking as well. And it is an earnings heavy week, so we have to see what is really on the investors' mind, whether they're actually going, whether these earnings specific stocks are going to be directing. FMCG counter, that one really important today as we wait for Hindustan Unilever's numbers. That is really going to give a direction for those major FMCG players and what we're going to see, whether there is going to be some kind of volume growth in these stocks that was anticipated. Rural recovery is what we are going to be looking out for from their commentary, and going ahead we have so many other results as well. So realty index there on your screens too in the green, whereas consumption, those names buckling a little bit under pressure, down about 0.1% at this point. But let's also look at the gainers and losers, which are the stocks that are perking up. Well, Dr. Reddy's lab, that one is up. Divi's lab, also another one that is up and about in trade. ICICI Bank, like we are saying, banking stocks quite being, either sometimes playing that man of the match, one could say. Then Power Grid, another one, NTPC, as well as Sun Pharma, a couple of the gainers right now on the Nifty. Whereas Wipro also in the gainers list, Bajaj Finserv, BPCL, all of them nicely comfortably in the green. Whereas losers, let's give you a round of that. Well, HCL Tech there in that losers list. Infosys, of course, bringing in that pressure ahead of its earnings, trading in the red there. Britannia, also another FMCG counter. We are anticipating those results. So that Nestle India, Apollo Hospitals, another of those counters that are in the red. So we do have a fair mix, one could say, of what we're seeing in the gainers and losers list, at least for now, because there are earnings that investors need to be looking out for. There's also the global outcomes and what those counters are really telling us of where the market direction could go. Can we really be headed towards 20,000? At least that's where we all want to put our eye on right now for the Nifty. But let me bring back Chandan and get in his views of what he's making, whether these charts are what he was also predicting for morning trade at least. Chandan, how would you look at these levels that we've opened at? We did anticipate that some bit of negative impact, but is that what you were looking at as well?
Yeah, so I believe this is the part of the consolidations until 19,730 is not broken. I'll continue to be with buy on decline stance. However, one can go with the stock specific approach over here. And if I look at the Nifty Bank, I've seen some sort of consolidative move here, but the good part is it is holding the previous day closing price. So I'll look at 19,730 as a support in Nifty, 945,400 support in Bank Nifty. We'll go with buying stance in selective PSU Bank, whether you talk about Canara Bank and SBI. I think PSU can catch the attraction and action during the day.
Right. Chandan, do stay with us. We will talk about the stocks that you need to keep on your radar. And like I was mentioning earlier, Federal Bank will be one of them. That's because the private sector lender has gone ahead and launched its qualified institutional placement, or QIP as we call it, the issue as of yesterday. And the floor price they have set is that of 132.59 per share for this QIP. Now, this definitely marks a discount of about 2% or discount against that market price that it closed at yesterday. But the bank has said that they could go in with an offer discount of not more than 5%, and which is why if you're seeing those levels right now, it is the floor price has been calculated in such a way. Now, the capital that they raise from this QIP will be used to bolster the retail growth as well as inorganic activity is what the management is saying at this point. So that Federal Bank will be one of the counters that you need to be looking out for, comfortably in the green right now. But how they're using these funds, they had in fact much earlier said that they were looking to be raising funds, and which is why they've now come out through this QIP route to do the same. Another stock that needs to be in focus today is that of Shree Cement. Now, this is because they've got a letter from the Ministry of Corporate Affairs for the inspection. And now this inspection was conducted under Section 206 5 of the Companies Act of 2013. Now, why is this inspection and what will it do? That remains to be seen. But right now, this letter coming in is definitely what is putting pressure on the stock that you can see on your screens. They're trading in the red. So that one definitely hit by this inspection that the Ministry of Corporate Affairs plans to be undertaking on this. But let's get in Chandan back again and ask him how he thinks this is going to really impact the company. We have, in fact, let's talk about pharma stocks in general. They've been sitting there at the sidelines, not really knowing how it's going to play out. But we've seen a couple of good rallies as well in some of those names. How should one be looking at the pharma sector, or should they be playing that stock-specific game here in this space?
So, like if you look at the Nifty Pharma, overall, the sector is holding the gains up by 0.2% today itself. I think selective pharma stocks need to be keep in mind. So I can focus on Zydus Life. There is a one stock which is having the huge strength. If I look at the price behavior, however, it goes slow and steady, but momentum could be there. And margin of safety can be seen here. Right now, trading near to 608, can put support near to 595. Stock can rally towards 630 levels. Dr. Reddy, if you notice here, positive price action is visible, a small follow-up is required. With support of 5150, stock can head towards 5400 levels.
Okay. Right, you're mentioning pharma stocks, and which is why we're talking about Dr. Reddys too, which has got the US FDA, in fact, has completed that pre-approval inspection there. And this, according to the routine inspection, the company's API manufacturing facility at Srikakulam in Andhra Pradesh, that's where the inspection was conducted. And this happened during July 10 to 19. Now, the reports of that are out, and the inspection has closed with a zero observation, in fact, and the classification of no action indicated, or NIA as it goes. So pharma space, definitely, like Chandan was also pointing out, look at it in stock specific names that you should be looking out for. But let me also bring in my other guest now who's joining me. I have Digant Haria, who's joining us on the show. Thanks so much, Digant, for speaking with us. What is your take? We'd like an overall view from you with the markets, the way they've opened today. Of course, seeing some bit of that consolidation, which one could say is factored in. But how are you looking at the current rally that we are in? And do you think it is something that is sustainable?
Yeah, hi. Thanks for having me here. See, I think what we've seen in the last 3.5 months, the indexes have made new highs. The small and mid cap have gone even higher than, the large cap or the Sensex. I think, see, this is a very big sort of a macro re-rating of India. And I would just think that, this macro re-rating of India actually started post the Russia-Ukraine war, that, everybody wanted a partner other than China, and other than Europe in terms of manufacturing. So, a lot of factors were already in place, but then the whole Adani issue, the Hindenburg report came in February, and, that just sort of stopped the rally. I think the big re-rating that we are seeing is a macro re-rating of India as a country, because, US, the best investment market, is slowing down. It's suffering from inflation. At the same time, China is something where a lot of investors don't want to invest in a very large way. So, just by that natural choice, India has become a very, very preferred destination. We have a really good chance that this, this whole sweet spot that India is, it continues for many, many years. But yeah, in all market rallies, things get a little overheated. So at these levels, while, we are definitely positive, but we would also be very, very selective at these levels, because, in good times, euphoria sets in, and, that's where you have to be really more careful. So those are, like very, very broad opening remarks.
That's right. So we are sitting in the sweet spot. We've been saying that repeatedly, in fact, and not just us, a lot of corporate India, a lot of people from the World Bank as well that we heard in these last few days saying that India is perched there. But let me go back to Chandan and ask him what he is looking at it. Does he have this macro view as well that we can actually be headed towards that 20,000 levels? And Chandan, do tell us, for our viewers, which other stocks and sectors that you would pick out for them at this juncture where the market is placed right now?
Right. So if I look at the data set up in internal to justify this momentum, first, we have seen huge flow from the FIs. FIs long short ratio, which was near to 8-9% in index, has gone to 70-75%. They are continuously buying. Second thing is volatility index is at lower levels. CBOE index is also at multiple months lower, and India VIX is at multiple lower level. The good part is that stock specific actions and movement in heavyweights is also visible. So these are the multiple reasons. And if you look at the fundamental side, the better monsoon, some pause in the inflations, highest ever the GST collections, these are the reasons that why this rally should continue and momentum could surpass 20K mark as well. So now looking at the stock wise, we'll positive view on the consumption name. So I'll focus here about Indian Hotel. The stock has seen long consolidation of last 7 weeks. Multiple support is taken near to 378, and now it is holding well above 400. So with support near to 392, stock can rally towards 420 kind of level. We have positive view on the PSU banks. I talked about Canara Bank and other names. So these stocks will be in focus. So with support of 332, Canara Bank can rally towards 355, 360 level. Positive on the defense and SIP companies. So Nasdaq from non-FNO space will be in focus. The stock already has seen good momentum, but still we find the lucrative movement here. So with support near to 750, stock has potential to rally towards 1900 to 1950 level. So banking, financials, auto, defense, consumption, this is going to be the ongoing theme for the Indian market, even before 20K or even past 20K.
Right. Thanks, Chandan, so much for that, giving us those stocks and strategies that we could be looking out for. A lot of names that he's taken. There were a lot of sectors as well that we could be looking out for. But thank you so much, Chandan, for joining us on the show. Let me go back to Digant Haria now. Digant, we do have a good momentum that we have established already. So what could be the headwinds? Now, we do know, like even Chandan was pointing out, a lot of tailwinds that we have already working in our favors, but what could be the headwinds at this point?
I see the real headwind for India is always the energy costs, or the cost of imports, because India still is quite dependent on imported energy, be it oil, be it natural gas. We still have to import a lot of it. See, we saw a huge bout of inflation during the Russia-Ukraine war. And after that, the inflation has subsided for now. But, the geopolitics are so tricky that we cannot just assume that, today's oil prices and today's natural gas prices will remain here for years. So I think that energy imports are the biggest threat to the Indian story, so to say. Not to mention that there is one event, we have elections in the next year. If, the continuity in the policies is very, very important for this whole India opportunity to really play out. So I think apart from these two risks, there aren't many risks that we can easily see at this point of time. And just because of the energy risk that I mentioned, we are heavily dependent on oil and gas imports. The Indian government, the Indian industry, everybody is trying that. We do a lot in the solar, the wind, the CNG, and a lot of ethanol, a lot of energy areas, and that is one space where we think a lot of work is going to happen in the next 3-4 years, and that is where investors can also really look at. So that is one risk which government wants to eliminate, and that is where the opportunity is very, very large.
Right. So there is a risk, but there is opportunity as well. Digant, also tell us a little bit about, we've seen a flurry of IPOs, at least in the last 2 weeks itself, a lot of IPOs. Is this the right time also playing with that India story that, could be a risk to be taken? Or would you say, you have to look at individual IPOs and what they really stand for? Or is the IPO bull market back, one could say?
I think, see, it's a big buffet dinner. Like, you have to choose what you want. I think IPOs, we will keep on seeing a lot of IPOs, because the kind of startups that have been incubated in the last 7-8 years, a lot of those IPOs will come. But again, see, we have to understand that, to make money, IPOs or a secondary market, we have to take the merit of the stock, the merit of the business model over the next few years. So there were a couple of interesting IPOs which had come. For example, there was a drone manufacturer called Idea Forge. But, the valuations at which they come, the listing, and, the allotments that you get, I think it's not really worth it to spend a lot of time for anyone who has serious amount of capital. But yeah, some of these IPOs which have come are going to be very, very big winners. And, one has to pick and choose slowly and steadily. And stocks like Zomato, Paytm, after the IPO, they rallied, but now they're giving a really good chance to anyone who wants to invest in those business models. So I think same will happen with the IPOs, which have, we've seen in the last few months as well.
And in fact, I was just going to come back to you and ask you about these new age tech stocks. And do you think there is a turnaround now that is happening in place? And how are you viewing what we're going to see? Is there a lot that could ride on their earnings as well?
Yeah, so see the new age tech stocks. So the new age tech stocks really listed in euphoria. Post that we had a massive correction because the interest rates went up. The unprofitable companies really went the flavor of the season. But you look at now, every company is trying to turn to profitability and deliver certain parameters that the investors want. But see, the biggest thing is that in all these last 4, 5, 6 quarters, the growth has never slowed down. They continue to grow at rates which are higher than 20, 25, 30%. So I think these are businesses of the future. Internet is very important in our life. Its importance is growing. So I think these are fast growing companies. And, whenever next the interest rate cycle turns, these companies would also become profitable. And, that is when, investors can expect, these companies to have significantly higher upsides. But yeah, for a long-term investor, the new age tech stocks, definitely some part of the portfolio should be there.
Right. Digant, I have to ask you because it is a day where we're seeing Reliance's demerger also for its Jio Financial Services business, and that whole price discovery going to happen for that stock. How are you looking at this blue chip, and what is your view on Reliance and even what has to come for Jio Financial Services?
So see, Jio Financial Services is right now, they really don't have any business. Okay, so they are going to start a lending business, and they have a lot of capital. They have the shares of Reliance and 6,000 crores of net worth. So combined net worth of Jio Financial Services on day one can be around 1 lakh crores. So that's a very large net worth to start with. But see, when you want to build a lending business, it's not an easy business. You have to first identify which customer segments, then you have to identify the people to write algorithms. What kind of customers am I going to lend to? What will be my OPEX? What kind of credit losses? So all to fine tune all of this, it takes a few years. So I just think that, Reliance is known to do everything big bang, but financial services, one place where, there's a lot of hard work. It's not that the space is empty and, Reliance can just come and sweep it away. They have to start doing some pilots on their the Reliance retail customers, and then eventually figure out what really works well for them. Because we have a lot of good players, be it the banks, the NBFCs, and fintechs, who are already there in the space.
Right.
So I just think that, the initial excitement is fine, but, long-term value creation in Jio Financial Services cannot be taken for granted today itself. You have to monitor how they do over the next few quarters.
Absolutely. So we're going to wait and see, but we do have Reliance's results as well tomorrow, so that you need to come back to Moneycontrol to get your fix of what is happening on that front. But thanks so much, Digant Haria there, the co-founder of GreenEdge Wealth Services, joining us this morning. Thank you for your time. Well, with that, it's a wrap on this edition of Opening Bell. Goodbye from the entire team that's putting this piece together. Thanks so much for tuning in. But do please post back your feedback in our comment section below, and follow our link at the bottom of your screens for the rest of the updates. Stay tuned to moneycontrol.com as well as the Moneycontrol app.